Yeah,
So
Jim was warning people at the top. I remember the quote because his Vixometer was flashing some danger, and he said it in a very gentle way. He said, "Can can everyone out there just be a little careful, please?" You know, because there was so rampant bullishness happening up there. So if you want to keep an eye on the VIX besides seeing the number and know what it means, term structure and everything, we have the right guy here. And Jim, you said you're coming here. You're here, but you're in a secret location. Uh, I'm wondering, you've got my curiosity piqued. If you told me, it wouldn't be a secret location anymore, right?
that's correct, Dale. Can you hear me
Uh,
okay?
yeah, I got you.
Okay.
All right. So anyway, you're undercover. Um, let me ask you this.
I'm hanging out. I'm hanging out at a conference today and tomorrow. It's pretty
Okay.
rough. I had to play golf yesterday afternoon.
Oh, one
I'm
of
gonna have to
those.
play. I'm gonna have to play golf again this afternoon. It sucks.
Oh man, you're gonna need a massage after 36 holes. Anyway, I wanted to ask you when it comes to the VIX, this pullback, even though that we're getting, seems different than recent VIX spikes and then give it all back in a hurry. Do you see that as well? Sometimes how a market acts after a move
Yeah,
is,
absolutely.
so uh, does that kind of speak to that there could be another wave of VIX to the upside, and this is more like a correction, the pullback we're getting in VIX here?
Um, I never know, Coach,
Okay, it's
and
fair.
none of us do. But I kind of look for breadcrumbs. I look for clues.
Yeah,
It's the old Joe Walsh looking for clues at the scene of the crime.
yeah,
Life's been good. Um, and so, yeah, this most recent um, move by, the market and the VIX was definitely different than what we saw, for example, in August
yeah.
and what we saw around the Fed meeting in December. This was yeah, there you go. And I'll pull some slides up here in a minute.
Okay.
But and what was interesting about this one was, it's kind of symmetrical, right? From the lows when S&P topped out
Yeah,
that third week of February, we stair step higher, and then we have turned around and started stair stepping lower. Um,
yeah.
so where the prior two were really much spikier, and the band from the base to the next base to a return to base was much narrower than this one. Um, Look, there's so much stuff going on, both in terms of politics and the economy and Congress and everything else, that um, I subscribe to the high likelihood that our current administration will make volatility great again. Uh,
Okay, got it.
he crushed it to super low levels in 2017. We all remember the year that VIX went to die.
Yeah, it was
And
archaic. The VIX was broken.
Well, and the VIX has been broken many times since then
That's what
too,
they
if you
say. Yeah,
listen.
yeah, yeah.
But
I'm thinking, because I look back at every spike here, Jim, and every spike got back to, the 14 level, the
right.
14 level, 14 level, even these, they all got back to these low levels, which were still a higher level than the historic lows here at
Yep.
1163. But to me, this looks like, I don't know if we're going to grind. To me, it looks like it's set up in here over the next week or so to make another move to the upside. I think this also this was more of a not panic. It was
Hmm.
orderly. Wasn't it
Yeah, it was.
orderly? Yeah.
I referred to it on Twitter as the orderly disruption.
Okay. All right. I like, great minds. Um, so, we're probably 78.6 back if you want to do a fib or anything, but
Hmm.
let's see what you have. People have heard enough of uh, my blabber. So, Barry, what about Fort Knox?
He was wondering if I was at Fort Knox.
Oh, oh, I see. Okay.
Counting the gold.
There's nothing to do there. Anyway,
All right, can you see my screen now?
got it.
Okay. So let's wind. And this is a somewhat shorter trip than
Cool.
some in the past. You know,
That's good.
the question you were asking, is it safe? And we'll find out. This is one of my favorites. Dale, you and I were around when the movie Marathon Man came out,
Oh,
and
yeah.
and Dustin Hoffman got caught in
Yeah.
a bind with a guy who wanted to perform oral surgery without anesthetics.
Yeah. Yeah.
But anyway, is it safe? I don't know. Let's talk about it. This is, taking that chart of VIX, and we had that August quote unquote crash,
Yeah.
which was by any measure historically the fastest rise and fall we've ever seen, of a spike of that magnitude. Then,
Right.
we had what I point to the Fed meeting, in mid-December, because that was again just a couple day thing before people settle down. And now we're having, and is this a growth scare? Is this rotation? Is this, I don't know what it is, but I call it a growth scare because I think people are, concerned about the Mag 7 that have been driving the index values. Uh, People are concerned about whether inflation is coming back, staying low. There's a great deal of uncertainty that all goes to whether the economy is going to continue to grow and support the stock market.
How
We'll
about
find
this,
out.
Jim? Could it possibly be with dollar weakness, a repatriation of assets by other countries to buy what is relatively cheap compared to the U.S. market, even though and that's the reason for their outperformance
Yeah,
over
it's
U.S.
it's kind of interesting. In addition to staring at the VIX on a day-to-day basis, I run several um, systematic strategies that are based on different look back periods and relative strength. And what I picked up, this is going back several months now, was this rotation outside of the U.S.
Yeah.
And currently, those models um, don't have any U.S. exposure. It's all international. So, and
That's a
then
big
you talk
shift.
to
That's
people.
a big shift. Big shift. That
It's
when's
a
the
huge
last
shift.
when's the last time that happened? 10 years
It's
ago, 20
Yeah.
years ago, 30?
Well, with any follow through, for sure. You go back to the aughts, and emerging markets were a great place to be, but that has not been the case really since the global financial crisis. So,
Right.
and is this going to sustain? I have no idea. You talk to people on the ground. You've got a bunch of people that you talk to every day in Europe and parts of
Yeah.
Asia, and they're all like, "Well, hey, you know what? It sucks over here. Things
Well,
are not great."
I mean, the bottom line is I don't care what your politics are with what Doge is doing and the fact that, basically there's a lot of what we're doing is more towards austerity,
Right.
while Europe is stimulating, China's stimulating. We're on the opposite end of what it's been for the last, since central planning, really
Yeah.
after the financial
Yeah.
crisis.
And look, I hate all politicians equally.
Yeah,
Um,
I'm in that
it's
party.
as a former participant in the military industrial complex,
Yeah.
I've seen that $1,000 wrench.
Mhm.
There's no question in my mind that there are places where we could save a lot of money in all of the activities that the government's involved in. Are these the guys to do that? I don't know. Are we going to break some eggs along the way? Almost certainly.
Yes.
And so I think anybody let's just say that the economy weakens and the stock market takes a crap. Anybody who is surprised by that is just not paying attention. And so I'm not saying it's going to happen. I don't care, frankly. It'd be
Yeah.
a lot nicer if things went along smoothly and we made a few changes and people were happier and people had better jobs. I you know
I can. Well,
but
you
I
know what,
play the
Jim?
cards. I play the cards as I see them.
Yeah, the price action. But
Exactly.
you really have to be an ostrich to not see that we either are in or headed towards a constitutional crisis. I've never traded a constitutional crisis. Have you? I mean, what were they trading in 1780?
Right.
I don't know. So I think that's and I know a real smart guy. This guy George Robertson, Bicker and Brattle. He was
Yeah.
long the market all the time. And when I asked him why he was getting out after the election, he said fear of a constitutional crisis.
Right.
And he just went ahead and bought Canadian dollars, and he's, kind of out of the market now.
Yeah.
So we'll see. Let's move on with the slides.
So this is,
Okay.
looking at these volatility events mapped against this thing I've created called the VIX mix,
Yeah.
which, for people who haven't heard about it before, it's a compilation of right now 17 component indicators of different aspects of the market and through the lens of volatility. So again, the arrows point to late July, August,
Correct.
the little Fed scare in December, and then this most recent hack. And what you can see is that, particularly the sustained moves down in the stock market were consistent with bearish readings and frankly divergences in those readings relative to the equity markets. Right, you go back to July, equity markets had been rambling higher. There was a little
Yeah.
pullback in April that's not on this chart, but
Yeah.
generally, markets were going lower left to upper right, and the VIX mix was saying everything's cool. There was a high in the S&P on July 16th, I think it was. And, this was not confirming that new high. Now, does that work every time? Nothing works every time.
Right.
But it basically said, keep your eyes open. And as that pullback started, and I think, let me go to the next slide. Yeah, as that pullback started on July 18th, the VIX mix went bearish. So 2 days after the high, this was saying, hey, something's not right under the hood. You better be paying attention. It got bearish and it stayed bearish through that surprise spike, in
No,
the first
August.
week of August. Oh my God, what happened?
The
Well,
unwind. Yeah, but you were getting tells about it
yeah,
in
and I
warnings
don't,
prior.
I don't care
Okay.
why. Was it the
Yeah.
yen? Was it the
Yeah.
dispersion trade? There was a crypto hedge fund that got a margin call over that weekend. There's a
Well,
whole bunch of stuff going on.
maybe that's your next career as a financial journalist.
No,
Because the
thank you.
reporters will always tell us after the fact.
Exactly.
They know what happened.
Well,
But
and Dale,
after it happened,
human beings need a story. We need somebody to tell us what happened and why it happened.
yeah.
And I'm just telling you, it doesn't matter. Anyway, the next one. So this was around the Fed meeting, December 16th, 17th. So, Fed meetings are weird, right? Because half the time you get a little buildup of volatility, a buildup of hedging, and then it's a non-event, and the
Yeah.
volatility just gets crushed, it gets squeezed out. this was one that was a little bit different. And, I'm not saying this was one you could call, but what you saw on the 2 days before the Fed meeting was that, we went from, uh, essentially from a high neutral reading down to a low neutral reading. It was dropping. It was telling you that people were hedging this meeting. And, there are some other things that I look at that suggested, there was kind of a low risk, long vol trade to be taken. Again, you never know if it's going to work out. But, again, there were signs for those who knew where to look. And in this most recent one, you had a S&P all-time high on the 19th of February. And, 2 days later, this thing was down 24 points and in bearish territory. And the 21st, was before the stuff really hit the fan. So
Yeah.
again,
That was that was a tweet that
yeah,
that was a tweet that I saw where you were just asking people at least be careful.
yeah.
That's all
Yeah,
you
here's
were.
a little closer look at that one, and along with this bounce, what you see back at that high was that you'd think all-time high for S&P, this thing should be bullish, it should be up in the green,
Yeah.
and it was just not up in the green. It was basically at the same level it was at the prior high in January, the sort of post inauguration euphoria.
Yeah.
And so this was basically saying, yeah, okay, fine, you made a new all-time high, but we're not convinced that it's durable. And again, you had then 2 down days, and this thing went bearish before you really had the full slide. So again, if you had said, if this thing goes bearish, I'm going to get defensive, that would have paid off pretty well. And then
Okay.
looking at this bounce, going back to where you started, Dale, the one thing this shows is that the low for the VIX mix was registered on the 10th of March.
Okay.
The low for S&P was on the 13th. So, what you can say is, again, does every divergence work? No. But, you were up off the lows in the VIX mix when S&P hit its low.
So
So,
it's a leading indicator.
yeah, you could say, hey, well, this VIX mix thing doesn't think it's as bad as it was a few days ago. So maybe we get a bounce. Now,
Yeah.
how do you play that bounce? I don't know. It's up to
Yeah.
you.
Yeah.
And there was no guarantee there was going to be a bounce. So, you're probably waiting a day anyway. And that first, 1 day rally, was most of the juice so far. So,
Jim, if I used to trade a lot of VIX options
hmm,
until last August, and I was watching the VIX during this whole decline, which was a huge percentage decline in a lot
yeah,
of MAGA stocks, and 20%,
yep.
and the average that's a pretty good hit in that period of time. I was surprised at how subdued the VIX was during that whole bearish move. Were
Yeah,
you?
and look, I think several things. Number one, again, it was if you take a line and you go from the lower left to the upper right on your chart in a straight line, there's no volatility. And if you
Yeah.
take a line that starts in the upper left and goes to the lower right in a straight
Yeah.
line, there's no
Yeah.
volatility.
Right.
But we like one of those better than we like the other one, but there's zero volatility in either one. And this was one of those kind of stair step down moves
Yeah.
where, I would suggest that, what we saw people, rather than chasing hedges, they were just taking off exposure. They were lightening up their Delta One positions, as opposed to
It,
trying
it
to
was
hedge what they
you,
had.
you really needed the patience of Job to ride this whole decline, because there
Yeah.
were several times it looked like, well, we could bounce from here, we could bounce from here. We
Yeah.
could bounce from here.
Yeah,
So
there were, again, you can
yeah,
see it on the chart where you had, several days of reversals before you finally hit the bottom, and there was nothing to say that final reversal higher was going to stick. The only thing that suggested it might, from through my lens, was that we were up off the floor of my volatility measures.
okay, all right.
So, somebody
So
asked
what
me a
about
question.
now? What? Yeah. What? So what about now with this recovery?
Yeah.
We're getting, um, we've been on the greedometer at extreme fear for a long time. So I don't think we're going to go from extreme fear to euphoria unless we are just going to have, at maybe at 6,400 we'll be there. But
Yeah. So
if we're, go ahead.
I've got one more picture and then a list. Um,
Okay.
Somebody asked me a question. If this market, this past several weeks, because one of the things I said was, market action like this is just not bullish. Somebody said, "Well, what do you mean by that?" And what would be a sign that the market was healthier? And one of the quick and easy ones from my perspective is to look at average true range. And the only trick to using average true range is you really need to look at it as a percent of the price, because as the S&P goes higher and higher, the average true range as a number is logically just going to get bigger with price. So this looks at the average true range as a percent of the S&P price. And you can see that when it gets down below 1%, that is typically coincident with a market that's going up. And the last time we had that was, in December with that push right before the Fed meeting. And, we really haven't gotten back there. And, we're at a pretty high level of kind of internal or day-to-day volatility. So this thing needs to keep coming down for me to consider that, this is a healthy move and one that might be sustainable. We're just seeing a continuation of significant, even though the close to close volatility isn't very dramatic. When you take into account the gaps and the highs and the lows, the trading ranges from day to day, we're still at elevated volatility day to day.
Yeah.
So,
Well, they're
that's
going to take plenty out of it today, aren't they?
it. Sure looks that way.
So what you're reading from now should would just a neutral reading on your
Yeah,
Vixometer?
I'm really look. I have models that, as I mentioned, are positioned largely outside the U.S. On a day-to-day basis, we're on the vol side, we're taking it cautiously. Here's we
Yeah.
had PMI this morning. I didn't see what it did. We got new home sales tomorrow, durable goods, jobless claims, and GDP, PCE, the Fed's favorite. Quarterly OPEX on next Monday. I think some of this morning was, I think I saw a headline that
Yeah,
maybe the
Canada.
tariffs are not going to be a big deal. But that could change this week, and who knows? So, I think one of the challenges in this market is you either have to be a swing trader or you have to be a very considerate, mindful, very long-term investor, who's putting money to work systematically and not paying attention to the day-to-day swings.
You left one thing off your list, the solar eclipse on the 29th.
Well, Dale, I'll add it to the list.
Just don't look at the sun. I don't care. I don't care because we need your eyes, buddy, because you're our watchman on the VIX.
I,
You're
I,
my go.
I I
Yeah.
promise.
Okay.
So that's my story. If people want to find me, I'm very active on X, Twitter, at Vixologist,
He is.
and people can still go to vixology.substack.com and subscribe for free.
I would rather have a guy that has knowledge of volatility um, handling my retirement account than someone who just thinks you don't have to worry about volatility because you have a portion in bonds, portion in stocks, portion in cash. So think about Jim when it comes to that. And I appreciate you, getting away from your conference, bro, and be looking forward to your stuff turning a little bit more neutral to because I'm looking to short this rally. Um,
Mm,
I think there's more left in price and time, but I, I I think there was just the intensity of the decline. Um, just in my training says Dale, sell the next rally in case it's a failing rally between 50 and 61.8 back. So I'm going to have to execute what I've learned over the years, right or wrong. So I'll challenge the market to prove me wrong up there. Um, Great having you, Jim.
peace be with you,
Thanks.
my friend.
Yeah, and great content. Follow Jim at Vixologist on X, and you'll start learning about his indicators, and maybe even have a chance to talk to him. So that's a wrap. Thank you, my trading warrior brother, and everyone else. People are thanking you, Jim, and everyone have a good day, and let's celebrate, a little relief in the markets and start stalking at your fib levels. And that's a wrap. Don't just count your VIX derivatives, count your blessings. Right, Jim?
Absolutely. Peace
All
be with
right.
you.
All right. Peace be with you too, Jim. Everyone have a great day. See you tomorrow for Turnaround Tuesday. Join the team in 15 minutes on the Morning Edge. Adios. You're welcome, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.